Hey everybody, welcome back to the TD Markets podcast number 9, I think.
9, yeah, it's somewhere there.
Yeah. No, it should be episode 9 because the last one was episode 8. Yes, episode 9.
It's about 9, yeah.
Welcome back everyone. Happy to be back. I go by the name of Tsepo, my brother here.
Ashley Revere, guys. Good to be with you again. T, wonderful being back again.
We're excited, my man. I think the last podcast we had was about 2 weeks ago.
Yeah.
I think, or 3 weeks ago. But now we're back with a fresh topic that I think most of you guys, they know, but they don't really want to know.
No, they know, but they don't know.
But they know, but they don't know. They really want to know. But before we get onto it, make sure that you subscribe to our channel. Follow us on all social media platforms. We'd love to engage with you. As Ashley always say, let's engage, Comment down below, subscribe, like, share. Tell your neighbor that you've got a podcast.
Yeah, tell your neighbor. Can we add, can we add another neighbor? To tell your neighbor to tell you that neighbor. To share the podcast.
And just everyone in the family.
Yeah, that's true. That's true, bro.
My man, we have a fresh topic, my man.
Yeah, let's kick it off, man.
I think get right into it.
If we can also maybe just mention the beginner will really also benefit from this.
100%.
100%. The beginner will really benefit.
Yeah.
The guys that are more intermediary advanced, yes, they will. But chances are that they've come across it, and maybe they just need to upskill a little bit more. But the beginner.
So basically, we're talking mostly to a beginner, but overall, to anyone.
Yeah,
right?
if there's value that they can find, they can find it.
Right.
Got you.
So let's get right into it. So there are moments where we're gonna make reference to a beginner because that's who we're talking to most of the time.
Yeah.
We want them, as you say, to be upskilled and to be knowledgeable.
Yeah.
So there's times where I'm going to make an example. You go to the store, you want to buy something. You want to buy something in the store. You go to the store, but then when you get there, you get overwhelmed by a lot of items.
Got you.
So when you step out of your car, you've got a plan. Hey, I'm going to buy maybe a sneaker.
Yeah.
But when you get there, you see a whole range of different sneakers. You get overwhelmed. And sometimes what that can cause is you might, something will happen to you emotionally. Then you might be greedy and buy most or maybe more than you would have you wanted to buy initially, and you would go over the budget.
Yeah.
Overbuy.
Got you.
Right. In trading, we say overtrade.
Overtrade, yeah. Overexpose.
Overexpose is one of the things as well. So the topic here on the same breath is the advantages, and I want us to talk about the disadvantages of trading a lot of pairs. Yeah. And trading a few pairs.
Yes.
There are some clients or some beginners that don't know what to trade exactly. There are some instances where I saw maybe you would be in a session, maybe we traded this particular pair, and then someone didn't trade it. And then when they see how the pairs played out, then they ask, what guided your thought process to choose that pair?
Yes.
That specific financial asset. So I want us to talk about how traders what can help them in focusing on just a few pairs, and the advantages of focusing just on the few pairs in, compared to just trading everything, because the MT4 is everything you can trade, man.
Yeah.
Every instrument you want, you can trade, depending on what's on offer, right? So I want us to talk about that, right?
Okay.
Is it important to trade everything on your terminal, on your market watch? Or is it important to focus on just a few pairs, and why would one focus on just 3 or 4 pairs?
Okay, all right.
That's what I want us to talk about.
Okay, brilliant. That's a fantastic angle. And I think let's then just dive into it, right?
Yeah, sure.
Can I maybe just hit off the bat straight?
Go for it, right?
Go for it. So I would say no. It's not advantageous or an advantage to you if you trade everything.
Okay.
One needs to streamline. But before we streamline it, we first ask couple of questions, right?
Yeah.
So we'll say pairs because we said trade everything. That's obviously inclusive of indices, everything, anything. Okay. So let's use pairs then.
Yeah.
Currency.
Let's focus on currency.
On currencies. All right.
Sure.
So I would first try to understand. Okay. So what is Forex? I would first start there before I make up my list. Now, why would I start with what is Forex? I would include questions like, what are the major currencies? And why are they the major currencies? What makes them the major currencies? And I would deal with liquidity. I deal with the types of volumes that gets traded on them. I would also deal with the country itself. Is it a developed country? Is it a developing country? Because developed countries tend to have larger books, larger GDPs, their exports and imports numbers are bigger, so their volumes of trading is much more, right? So I would start there, and I would always compare it to an engine. Now, I'm not a engine guy at all.
Yeah.
In fact, bro, I think a person that can put an engine together is extremely intelligent, bro.
I mean, have you seen an engine, man?
Bro,
have you seen how huge it is?
Bro, all the small parts to it, I absolutely believe if you can put that thing together, you are absolutely... That's just my view.
Sure, people take years to put an engine together.
Years to study every single part, and then I ask you about it, and you can tell me why it must be there connected to this. It really takes a lot of mental power for that, bro.
Fully agree.
So an engine, with my little knowledge, all the guys comment, don't worry, I'm telling you a little knowledge on it.
Yeah,
right?
that's the disclaimer right there.
That's a disclaimer. We are traders. The engine needs oil, right?
Yeah.
It needs grease. It must be greased and oiled because it moves better when the parts, because it's steel, it's metal, it needs, otherwise it will rust, right? So when an engine is oiled or there's grease, the pistons move better, etc., right? The same with the market. If there's money in a particular asset, it moves more. The less money in that specific asset, it's going to consolidate more. And so if you are a beginner and you looking to create your list of what you're going to trade in terms of currencies, I would look at things like that, which have more liquidity. So I'd start with, like I said, the major currencies because they have more liquidity than the exotic ones. Your pound, your euro, your US dollar. I'll just use those three as an example because all three of them have been the major global reserve currencies in the past, US dollar being now. So they're the most traded currencies. Not only that, they virtually accepted in many countries, especially the dollar. Any online platform these days, you'll find you can actually trade with dollars, right? So let me take a step back again.
Sure.
I'll ask, what is the liquidity levels? Are they the most traded? Do they have big trade agreements? What are the imports and exports like? So that's going into the detail of it. To come to the result of saying, great, the US dollar is a very popular currency. It moves great. Therefore, I know if I place a position here, the likelihood of that engine being oiled is greater than a developing country, perhaps in Africa, as an example now. Yeah. Right? That's where I would start.
I'm glad you mentioned major, minors, and exotic pairs. So here's a scenario, right? So let's say I'm a beginner, right? I'm a beginner. You know, I have a little bit of knowledge in trading, but I understand enough for me to place a trade and for me to spot an opportunity. But now I open my MT4 and I can see that things are moving there. I get overwhelmed. Of course, we want to trade everything, right? Because there's money moving. Yeah. Right. So now I open up this particular pair, I do my analysis, I see, okay, maybe it's not ready, maybe it's not ready, or maybe it's ready. I go to GBP USD, I see, maybe that one is ready, right? And then I go through all of them, most of them. So my point there, my thing is, sometimes trading a lot of currency pairs will then, especially as a beginner, will be bad to your progress because now, number one,
got you.
What's the first thing for a beginner is consistency. If you can find consistency. Now, be it consistent in profits or your approach, but what's important is being consistent with how you approach the market.
Okay.
So now, let's say I take Euro USD, right? I want to focus on Euro USD to get the consistency. So which means I get to follow Euro USD. I learn how it behaves. I learn how it moves. I learn the things that appear most of the time, right? Not everything, but they appear most of the time. And then when I go to gold, let me not say gold, when I go to GBP JPY, I can see, but I don't see what I saw on gold, right? Yes, market structure is there, but I can see on gold, there's these particular patterns that form most of the time. But on GBP, JPY, it's other patterns. So you see now, if you go through all of these currency pairs, you're going to see that they move differently, which as they should. So in terms of consistency now, finding the consistency, sticking on one currency pair and then just trying to break it down and then later on moving to another one. I think for consistency, it's a little bit better that way.
Okay.
But also understanding the majors, right? So the majors, as you said right now, valid point there, I would say majors are mostly traded.
Yes.
Right? 100%.
Agreed with you 100%. Yeah.
And now it's important for a beginner to know that as
Yes.
well, that a major, right?
Yeah.
You can't, well, you can on paper, but it wouldn't be a good idea to start off trading US dollar and maybe Russian ruble.
Yes, or
Because it's
USD
an
ZAR.
exotic.
Yeah, exactly. Or
Yes.
USD ZAR.
See? Yeah,
Yes.
because now you might not find the movements that you would want to get as a beginner.
Exactly. Less oil, less grease.
Less oil, there we go.
Yeah,
Right.
yeah.
So exotics are known for less oil.
Yes.
And also the spread is too much.
The
too
burden.
much.
And this is also some of the stuff. No, it's powerful, bro, because that list comprises of assets that have narrow spreads.
Mm-hmm.
Exactly.
And you'll find most of the time on the majors, the spread is narrow. The spread is low on the major pairs.
About 1 to 5 pips or so,
Yeah, you
depending
know,
on fundamentals. Or
100%. On a normal trading day, you might get it with 3 pips, maybe
Exactly.
3.7 pips.
Yep.
Right. So that is the issue there, the point there to say, yeah, look, what is the pro and cons of trading? In my opinion, the disadvantage of trading everything is you might not get enough time for you to master
yes,
how a currency moves.
yes.
I've seen a lot of traders that trade only 2 things, only two
Only
currencies,
2.
only one currency. You know,
Yeah,
And you
but they
need
won't
to-
trade
need to-
as frequent.
I was about to say.
Okay, great. Okay, cool. I'm on the same page.
Yeah, we understand. But now you need to have patience now.
That's
you
the
know?
that's the patience right there. So then the word then, okay, so can we call what you've just said specialization?
in trading just a single pair.
Or learning the behavior, the patterns, like you said, rightfully so. You take one pair, Euro USD, you study the behavior patterns,
Yes.
what it does in a month, what it does in a day, what it
we
does
can
in a
break
week.
it down
You
like
can
that.
break it down in the time periods, right? And you begin to specialize in that Euro USD.
Sure, yeah.
And to your point, rightfully so. Then you take another Euro cross, like Euro JPY.
Yeah.
And then you go and see, but hold on, the Euro USD moves like this. Does the Euro JPY move the same in certain instances or different? So that specialization becomes one advantage, because your question was earlier, is it advantageous? So the specialization for me personally, based on your example, is definitely an advantage for a beginner.
100%. 100%. So now, you mentioned adding on another pair.
Yes.
So that will come later on when you're comfortable with
Exactly.
Euro USD, right?
Exactly.
Then because it's a euro, you would want to see how other euros move. Because there's a dollar, you want to see how other dollars move, right? That is now adding on to your portfolio now. Say, all right, let's check Euro JPY. Let's try and figure it out.
Yeah.
Because now the lack of consistency when it comes to profits and overall the approach, that's why, and we spoke about this when you spoke about strategies, that there's something called strategy hopping, where you hop on one strategy to another.
I remember.
It's because of they don't really understand their approach. And that's where now trading a lot of pairs, that can be the cause of that, right? So looking at everything at once, it needs someone who's experienced. I mean, you and I can look at a lot of things.
Yes.
You need someone who's experienced. But now, as a beginner, consistency then becomes important, and your approach, understanding your approach. So when you trade a lot of things, it can stop your consistency, or maybe be a problem to your consistency.
Yeah.
Something like that.
Can I maybe add another advantage there? Because specialization, would we agree that it's an advantage? Advantage. Another one could be the deeper understanding of that, not only technically, but if we're doing Euro USD now as the guinea pig, right?
Yeah.
You get a deep understanding of the Euro economy and the US economy as well. So if it's interest rates or it's unemployment rate, that's the deeper understanding of why that pair is moving technically the way it is.
There we go.
So if you do one pair at a time, it's not only specialization from a pattern perspective, but from a fundamental perspective as well. It becomes advantageous to you. You'll know when the times is set for Lagarde or for Jerome Powell to actually speak. You'll know exactly what the benchmarks are for inflation, for interest rates. So you know, if inflation comes down, what does that do to your currency?
Yeah.
If the interest rate goes up, what does that do to your currency? And so that becomes a deeper understanding for your setup now. Look how all of that goes into your setup.
Yeah.
So just imagine you have a buy setup for the Euro USD and fundamentals comes out and it delays your setup. So you can see it's a buy, but then the price pushes down. And so because you have a deeper understanding, you're like, it's okay. This is just a delay for my setup. I'm waiting for it to find support, for it to push back up to the levels where my setup originated from to break that area so I can still get to that specific TP.
Now we're breaking it down. Now. Like, see how we're breaking it down now. So we move from the technicals now to the fundamentals.
Yes.
Now imagine a beginner. How are they gonna find time to learn to even go about learning the fundamentals?
Yeah.
They're looking at this, looking at that, looking at this. It's gonna be overwhelming.
It's going to be overwhelming. Absolutely. Yeah. And then you still have a job, you know, you need to, especially the part-time traders, someone that's not doing it full-time. Like, for example, you and I, we full-time doing this, teaching, trading, you know, having our sessions. It's a full-time thing for us. But for a guy that has to go to a 9 to 5 that is in the industry of health, as an example, imagine that, you know, you're in health and you need to scalp.
Let's speak to that guy. Let's speak, because let's be fair, most of our clients are like that. You know,
exactly.
they've got 9 to 5, they got businesses, whatever.
Yeah.
So now, and that's what the problem is now.
Yeah.
And you know, some of the reason people, you know, tend to give up on this is because they have knowledge, but they know, but they don't know.
They know
No, let me not put it like that.
Okay.
What did you say in the beginning? They know, but
they don't know.
That's
That's exactly what I said. Yeah, they know, but they don't know.
Look, no disrespect. They know the information, but now there's something lacking there.
Yes. For them to know what they know.
Yeah. For them to put just just color to this image.
Got you.
You know. Yeah. So let's speak to that guy. I want us to speak to that guy to say, hey, look, you know, one of the myths, and you know, I don't know, man. There's a lot of information. This thing can be broad, but most of the beginners I've come across, they think that, number one, you must trade everything for you to be profitable. Number two, you must, they believe that one setup cannot make you a target, cannot make your target. Like, for example, let's say you look at Euro USD, you see a high probability setup, a good setup.
Yeah.
Right? Of course, there's probabilities and this and that emotions, but with that one setup, you can get your target. You can gain that 5%, 10% what you targeted for the month on that one setup.
Yeah.
Now, a lot of traders believe that, or mostly beginners believe that you need to have like 5 setups, 5 trades of different setups at once for you to get there. And you can still do that.
Sure.
There's no problem with that.
Just takes more time, bro.
Yeah.
There's a lot of time and effort into that. Instead of having one setup that you master, you really break it down and you know your steps very well. Can I make an example of that, right?
Yeah.
So like back in high school, right? So we had this subject called home economics. Like I still till this day don't know why I took that class.
Aren't you guys cooking there?
Yeah, it's cooking and making bags and tie-dye and all of that. But I guess it was my generation, you know?
Yeah.
But the point is that I'm now I'm in numbers now. I'm in numbers, I'm in creativity, I'm in a mixture of things, right? So what I did learn, I learned how to make a bag, bro. Like I can cook. But check this out.
Sure.
We were threading, right? And I want to touch on the part of beginners that you mentioned. We were threading needle through small needles. You know, the little eye of the needles. You get thick ones, you get medium, you know, you get different sizes.
Yeah.
And it's very difficult, actually, if you're just starting out, to take a piece of thread and put it exactly to...
Yeah.
You know, put it right.
They know.
You know. So,
Sure.
what I've seen what beginners do, they thread through information. They'll look at a video of support and resistance for 3 minutes. That's their thread. Then they go to another 5-minute support and resistance, another 10-minute support. So now they total it up. It's 10, it's 15, it's 18 minutes of support and resistance. And they believe that needle that they took through, all right, or the thread that they put through that specific video is enough to give them the understanding of support and resistance. When they should be sitting with that thing, that support and resistance, not only looking at videos, but looking at the origin. Why? How? Where did support and resistance come from? Because people on YouTube, respectfully so, they also want to make money. It's business models that's on there. They want you to look at their stream, at their video, because the more likes and subscribers and views they get compensated for that, right? However, that is one way to utilize threading. You must do deeper diving and say, listen, Where does it originate from? Why do they call it support and resistance? What does it in its root meaning mean? What does support mean, its root meaning? Because money is an ancient thing. Money is not a modern thing. It's ancient. So before it was called trading, I mean, we know it was called bartering. But the concept of trading did not change, the exchange part. We just changed the terminology. It was bartering, now it's trading. There's going to be another term in the next couple of years. It's just how things evolve, right? So we must go to the concept of things and understand it in its root form.
Sure.
And then we build from there. I was actually telling the guys in the beginner session today, you can't build from an advanced place. You build from a basic place. And I think you and I, we've mentioned this in one of our other episodes. You build from a basic place. And the basic is, listen, don't just thread information, quick couple of videos, and then you say, I understand support and resistance. Now, the point why I'm mentioning all of that, because I've also met beginners, and I can say I was one of those guys in my we were one. Yeah, I was in my first and second year of actually trading. I would listen to a guy that's been in the game longer, but because I threaded 18 minutes, I didn't listen to him actually, because I thought I knew everything. But actually, that guy understood the things better than me.
Sure.
Because he sat and he immersed himself in this thing, you know? And so beginners need to start having that kind of mindset. Do I blame them? No, Tim, man. You know why? No. Because the world is such that everything is fast.
Yeah.
So you want to get a 3-minute on the go in your car. A 2-minute in the elevator. Okay, that's a very long 2 minutes. I don't think any building is long for 2 minutes. Yeah. You know? So I don't blame them. It's how society has evolved. But we should be able to say, hold on, I'm a beginner. Let me not just go through 18 minutes and then believe I know this whole topic. It takes masters. And if you go on a master's level academia or PhD or a honors degree, you spend years understanding that one topic. And so we shouldn't deviate from that and think just because it's trading, we can make money. Now we can just do it in the space of 6 months.
You know, I just want to off-ramp there a bit. There's a movie we spoke about. On the same note, there's a movie we spoke about on one of the sessions, American Gangster.
Aha.
You know, the Denzel Washington.
The Washington man.
You know, Denzel Washington is my favorite actor.
He's old now.
Yeah, he's old, but he's still killing it.
He's still killing the market.
you know, Denzel Washington, I did a bit of research on him a few years back. And he comes from a theater. He has a theater background. That's why you see him just excelling and doing.
He's brilliant.
What he's doing, he's brilliant.
How he puts that scene together, like
there we go.
The improv and
everything just about it. You know, I have a bit of knowledge in acting and theater and all of that.
Guys,
like I'm not gonna
guys, just check this smile. All right.
You know, yeah. I mean, we can sit down and can just break it down for you, but there's different moving parts there. My point is with him. He started in theater because theater taught him, it's like when you cook, it's easier to cook on the stove. But go to the 3-pot outside.
Yeah.
That is what theater is then.
Sure.
Right?
So it's really at the bottom. Like,
yeah.
Cool.
No, but the work is just raw, you know.
Exactly. That's what I mean.
If you watch a theater piece, it's just, let's say, 1 hour, 15 minutes, just there, boom. There's no cut.
There's no special effects.
Right? So he believes that actors that want to learn how to act, they should start there, theater, so that they can understand the craft better.
Okay, you.
It goes to what you're saying now that, you know, when you want to learn this thing, you know, it's better if you just learn from the, you know, the root meaning of some of these things so that you understand moving forward.
Exactly.
Everything.
Exactly. I had a guy, that was 2018, 2019, right? He's an accountant. This guy eats, sleeps, breathes numbers, man.
Sure.
Loves his numbers, right?
Passion, man.
And I taught him Forex, you know, the trading part, whatever. And he sat in my class for a week, right? And when it was, but he just looked at me like the whole week, like no expression on his face. He even looked angry.
Yeah, I know those clients, my man. Yeah.
So I was thinking to myself, you know what? I have to at the end of the week speak to him.
Sure.
Because I don't want to, if he's not having a good time, I don't want to increase any petrol levels and make it bad that he steps out for the week. So let me rather just put my emotions aside of really wanting to speak to him and be professional and look at his face and just deal with it. That's fine. I'm not going to make any sudden movements or make him feel uncomfortable, and tell him that I've noticed him.
Yeah.
And by the end of the week, I say, hey, man, sir, I caught you, did you enjoy it? You looked a little bit unpleasant. Correct me if I'm wrong. And I asked him, please correct me. And he started smiling. And I was surprised, man. I was shocked. And I asked him, you smiling? He says, yes. Ash, listen, I enjoyed you. I'm like, really?
Hey, that's a different way of...
Brother, I'm telling you, he's like, I really enjoyed it. I'm like,
Yeah.
really? He's like, yes, I'm an accountant by profession. That's how I got the download. I'm an accountant by profession. I thought trading, I had to calculate the charts. That's what he thought. It's only numbers. And he said, to my surprise, I'm so happy that I came to understand what the market is about. It's not just about numbers. There is acumen in emotions that you must take into consideration. The feeling, the psychological part. Because I'm numbers based. So I now had to go and do a deeper dive into my mind to understand how do I actually facilitate this entire thing using numbers, patterns, and my psyche. And I was blown away by that, bro.
Hey, because as much as accounting is numbers, but it's a different ball game.
It is a different ball game, bro.
You are balancing the sheets. You are just doing this in the trading where we're looking at the performance. There are numbers there, but you're looking at the performance of these markets.
Exactly. And the minds that create those decisions is all psychological because it comes from what they perceive as value. And that comes from emotions, connections to families. People make decisions for profit based on lifestyle. I want to buy cars. I want to buy perfume because they want to smell good. They want to look nice for the ladies. All right, ladies, right? And so they make those decisions because they know that's the end result. And some of them get it and some don't. But the point is it's connected to more than numbers.
It's more than numbers.
It's more than numbers. So bro, if I can just maybe just say those two advantages that I mentioned. Specialization 1. 2 was deeper understanding of what you're trading, because the question is it advantageous? Is it an advantage for trading less pairs as a beginner, right? Can I give you a third one?
Go for it.
Better risk management. If you're trading 1 for now, or if you're trading 2, so your risk management approach, because now imagine you have 10 pairs that's open. Now you have to consistently go back and forth. Remember we spoke about the scalping episode that we'll have where we deal with stop losses and so forth. It's tight. There's a prelude, guys. So having to look at 20 pairs consistently like this, bro. You want to chat on that one?
Yeah, it is possible, right? It is possible. But
if it's a full-time job, bro.
Yeah, and also to an advanced trader, it is possible.
Yes.
But for a beginner, as I said, it needs experience, my man. And also you touched on risk management also, which plays a huge part. Big part on that. Yeah, I mean, 20 pairs at the same time, I would say no. Personally, I would say no. I would say no. I told the guys last year before we went for the December holidays, I told the guys that this year I want to focus on just, maximum 3-4 pairs. Right. And not only for myself, but for them also, to make things a little bit simpler. Because if you jump from this pair to that pair to that pair to that pair, they're going to be confused somehow. Somehow. Might not be this week, might not be next week, but at some points they're going to just be a little bit confused. So if you break it down a little bit simpler, say, okay, these 2 weeks, let's just look at these 3 pairs for these 2 weeks, right? Let's just fully immerse ourselves in that. Let's see how they move. And trust me, I think by doing that, they're going to understand a little bit more better. Way more better, right? At the same time, I'm not saying, we can do that with 20 pairs. But my issue then is they're gonna start ask, okay, I missed this one. Should I have gone into this one? I missed this one. Which one should I have gone into?
Doubt yourself, right?
Yeah, there's gonna be a bit of doubt because you are overwhelmed. At some point.
Do you know what I've seen on your point of the doubt aspect? Let's say people begin to understand correlation between the pairs now. That's obviously the guy that's more intermediate and so forth.
That's advanced now.
That's more advanced, right? So now you're trading USD Swiss franc and you're trading Euro Swiss franc. And then you see GBP CHF on the other side. So now there's 3 CHF crosses. The Euro CHF USD Swiss franc is going up. But the GBP CHF is going down. Now it's like, but the Swiss is strong there, but it's weak here. Now you have GBP CHF. Then you go to GBP USD.
You see now what happens.
Now because now you're like, but isn't, because the GBP CHF is coming down, isn't GBP USD supposed to come down as well? No.
See?
Because it could be a totally different scenario. Now the GBP is strengthening against the USD.
See?
And that can also bring doubt because you're not getting the correlation right.
There we go.
Where you could have set out of the GBP CHF for now, trade the USD Swiss franc, Euro Swiss franc in the direction, get your TP, come back to the GBP CHF. Just monitor it on the side.
There you go.
You monitor it on the side. Oh, wow, this one's not moving as much as the other two. So let me make my money there and I'll come back over here.
And also on that correlation topic, it doesn't mean that you must trade all of them at the same time.
Exactly.
Like, you see,
exactly.
Like, for example, how I use my correlation, and I'm gonna then give it to the guys now. So this and
guys, please, guys.
And this is for the clients that have accounts with us.
Yes.
But let me just put a teaser. Hopefully they will join. So when I do my correlation, when it comes to gold, this is how I go about it. I look at gold, silver, and AUD USD. Boom.
Yeah.
Gold, silver, AUD USD. Out of the three, I trade gold most of the time. But I can still trade these ones. So what I do is I would analyze gold, looking for a trade, but I would monitor these ones and see how they move so that I get my gold picture.
Yeah.
So to
Got
say.
you.
Because now what then happens most of the time is they all move in the same direction most of the time. Not all the time. Most of the time. So if gold goes up, silver will follow, AUD/USD will follow.
Yeah.
But sometimes AUD/USD tends to be a little bit delayed.
Yes, because of the dollar.
Yeah, exactly.
Because of the dollar,
so it's going to move a little bit later on.
Yes.
So I would then put all three of them, looking to trade gold actively, but monitor these two. But I'm not trading these two. Even if there's going to be an opportunity there, I know I'm looking at gold. I want to trade gold.
Yeah.
But now you can also do it such a way where you would trade gold, trade silver, AUD/USD at the same time.
Yeah. Yeah.
That's not how I do it myself. And yeah.
So bro, you know what? Because we are colleagues, we are partners. No, I can't let you go alone. We have to then also give away something else now, right?
Go for it.
The correlations I would use is dollar index now. DXY, gold and Euro USD now. Because dollar index moves up, gold comes down. Euro USD will always be in between those two there. So if the dollar goes up, the Euro USD is going to come down. If the gold price goes up, the Euro USD won't come down. The Euro USD will generally go up because the US dollar is obviously correlating the Euro USD more accurately because the Euro USD is the most traded currency pair that we actually have. So it will move far more accurately with the dollar index. And because we are partners, we both am getting into and giving the guys something. So we're partners, all right?
Yeah.
So T's on the gold side there, 100%. I'm more on the dollar index, but in essence, they move. So if the gold is up, dollar's down. So we're basically giving.
Now, you see what we did now? We didn't deviate from the topic. The topic is few pairs.
Exactly.
You see, now you can take dollar index, Euro USD, and gold.
And gold, yeah.
Just
those three.
Just those three.
Exactly, bro.
Make things simple for you.
Simple, bro. And know their relationship.
There you go.
Know their, just like you said, AUD comes later.
Yeah.
That's the relationship.
You see those things, those dynamics there.
Aha.
But now don't start adding NZD,
USD ZAR. GBP ZAR. Cryptocurrency. You go to BTC USD out of nowhere.
Imagine. And those things do happen, my man, where you have your DXY, Euro USD, gold, and then you see no movement.
Nothing, bro.
For the whole week, no movement.
Yes.
You go to social media, see people are trading. You know what that does to emotions? You would now want to go to GBP JPY now, GBP CHF. What the hell are you doing?
I love the rawness, bro.
Sorry for the...
It's like the theater, guys. It sometimes gets raw.
It's raw.
It's raw, bro.
And those are things that we want to try and just explain to the guys and say, look, most of the times what we do when we trade, we wait.
It's more of a waiting game, bro. Actually,
But when you wait, it doesn't mean that you are leaving perhaps on silver that is moving.
Exactly.
You're not focusing on silver.
No.
Next, you're not focusing on silver.
Bro, can I even go as far as to say this, right? What people don't understand, especially beginners, remember, and I'm going to say this, brokers are being raw. They're being lied to in certain instances. Let's make money now. Let's make money now. Okay, true. Yes, that can happen. But they should also think of it this way. If you have a salary that you only get after 30 days, you're patient for 30 days. Why would you not be patient for 3?
Facts.
Why would you not be patient for 4 or 5 days, 1 week,
Facts.
and make your 30,000 or your 60 or your 100, whatever amount of salary, you can make a quarter of that. Just wait 5 days.
Facts.
So
That's it.
So if the guys can understand, they can do it from what we've just mentioned. There's your gold correlation that they can use. Here's the dollar correlation. If they take those two, and they say, those are six pairs, so to speak. Let me just try one of them, meaning one set, those 3, for the next 3 weeks. They don't, it's 30 days of salary, but maybe they only need to wait 6 days, and then they can see, wow, okay, this thing needs the patience. It just needs me to wait a little bit. That's it.
Yeah, that speaks to the psychology sometimes of trading.
Yes.
And you, like you said, they are misinformed.
Yeah.
Of course, that is the reality.
Yeah. That's the reality, bro.
That's the reality. And in this day and age, I mean, things are expensive. This and this is happening.
Yeah.
People tend to want money now.
Exactly.
And they believe trading
is
that.
because of how it's marketed. And
Exactly.
And you know what? Rightfully so. I can appreciate marketing. I can appreciate business models. I can appreciate the capitalist system.
Sure.
Because it's to make money. So how you market that, if you make money from that, I mean, guys make millions by just selling courses. At TD Academy, we provided for free.
For free, yeah.
Now, just imagine we went on the rampage and sold the course. I don't think, from a quality perspective, we wouldn't deliver the same thing personally. Like, that's just us. That's me now, right?
Yeah.
Because our passion is not stimulated by money. It's for the person to empower them so that they become more independent and more informed. Well, that's what stimulates me. And we partners. Bro, you didn't come on here just for money. You love interacting with people and making sure that they understand the concept. That's where we get our drive from, right? So the misinformed or misinformation is that marketing is spot on, bro. So I can really appreciate that. But it does not mean that what you buy there is what is needed to make a success.
And also, when you teach someone, you learn more.
About yourself.
Yeah.
Bro, I told the guys last week, I said, please ask questions.
Yeah.
Because when you ask me questions, you're sharpening me with the knowledge that I have to see. How much can I remember from this past almost decade? How much do I actually remember? And how can I answer you that makes it more simple? I totally agree with you, bro.
There you go, my man.
100%. Can I mention one more, bro?
Go for
one
it.
more advantage. One more.
Yeah.
Lower transaction costs.
Fact, that's true.
Commissions,
That's true.
swaps.
That's true.
If you have, example, let's take your correlation there. AUD, USD, gold, and silver. Different lot sizes. You have 10 standard lots on gold. You have 5 on silver. And you have 100 lots on AUD, USD. The transaction costs associated with all of those big numbers. Now imagine you have 50 positions on AUD USD, you have 100 positions on silver, you have 200 positions on gold. I'm just trying to make it very extreme. Those transaction costs are going to be insane. And that's just using your specific correlation. The same with my DXY, Euro, USD, and gold, right? How much more if you have those 3, plus you add USD ZAR, GBP ZAR, Euro ZAR, USD ZAR, you're doing more exotic pairs. Let's say you are trading 30 pairs at the same time and your order form is massive.
Sure.
Imagine the transaction costs.
Yeah.
It's massive. Swaps. Because the more volumes you trade, the bigger the swap. If you have a smaller transaction, the less the swap overnight for that position to stay open.
Yeah.
So an advantage then of having less, more focused, more specialized, better risk management, lower transaction costs.
See how it is. And, those are the other things that can be technical in the background that one might not be aware of.
Yes.
Right.
Agreed. 100%, bro.
Yeah. So that's how it is, my man. This trading a lot of pairs, I know there's a gentleman who's well known. He's now late. May so rest in peace. He's the one who shaped trading in South Africa, right? Back in the day. And, as successful as he was, You wouldn't find him trading a lot of pairs at the same time.
Yes.
I mean, if I remember, he used to focus, he traded USD ZAR because he lived in South Africa. He's from South Africa. He used to look at Euro USD. I believe GBP USD was also one of the biggest pairs for him. And I think like a maximum of 3 pairs or 4 pairs there. Then now and then he will take a look at what Bitcoin is doing, right? What maybe AUD Swiss is doing. But those 3 pairs, he knows those are his go-to pairs.
Yes, man.
Whenever he looks at those pairs, he knows there's money there.
Bro, I think that takes a lot of maturity as well. You have to be mature to see it that way. It's
to trade the markets.
Be disciplined.
You see, we cannot control the markets. You have to have this level of discipline. You have to be, and those things you learn as you go along.
Yeah. So the guy shouldn't try to, especially as a beginner, ingest all of these things at once.
Hey, it's not a good idea.
It's not a good idea.
Not a good idea.
So maybe just a couple of steps back from my side, bro. Specialization for me is an advantage.
Sure. Yeah.
Better risk management. If you're trading less pairs, that's another advantage for me. Lower transaction cost is another advantage for me. And deeper focus, like deeper understanding, of that specialization that you've now taken on. Those 4 for me is advantages.
Yeah, and also on that one, I want to add one there, which is your last point, deeper focus. It goes down to the psychology as well.
Yes.
You're gonna understand psychology a little bit more better now. You'll be able to master your emotions. We know greed, fear. Those are things that creep up now and then.
Yeah.
You're gonna have a good level of discipline.
Yeah.
Those are things that will be extremely beneficial to
yes.
a trader.
Yeah,
man.
Can I add one more?
Go for it.
Is that fine? just one more?
Yeah.
Never exalt yourself to an image that you're not currently at as a trader.
Break that down. Just a little bit. Just a little bit.
If you're trading for 2 weeks, don't speak like you've been doing it for 2 years. Humble yourself.
Where's the popopo? Where's the popopo? Yeah.
If you've only been in for 2 weeks, don't speak like you've been in it. Just humble yourself and learn. Because you become sharper by listening. There's a very wise page, that says, be quick to listen and slow to speak. And as many guys, 3 months in, and it's like it's 3 years of experience.
I think that's where you should leave it.
We should.
There is a point. There's a point. That one.
Stay in your lane. Yeah. Stay in your lane.
So yeah, guys. The topic was, advantages of looking and trading at just a few pairs.
Yeah.
We know as a beginner, you might want to go through everything on the market watch, which we've been there. We understand, but at some point in your trading career, you will start realizing, just like a strategy, you start realizing that you need to focus on one thing.
Yeah.
But yeah, that was the topic. Hope you guys enjoyed it.
Yeah. It was fantastic, man. Bro, thanks. It was fantastic being once again with you.
100%.
I thoroughly enjoyed it. These are some of the things that I believe really grows people, yeah?
This is, all the episodes we've had, this is just golden, man.
It's golden,
just gold there.
Absolutely.
We're hoping that you guys are learning. As always, follow us on all social media platforms. Watch out for
drop
our
your comments.
Drop your comments.
There, if there's any questions, please pose the questions. 100%. We can address them in the next episode.
There we go. In the next episode.
Yeah.
Drop a lot of questions, guys.
Yeah.
Don't forget to like, share, subscribe, and tell everyone that we are here. All right. Keep a close eye on our opening bell on our NFP CPI live streams. And we'll catch you guys on the flips.
See you soon, guys. Cheers. All right. Ciao.